everyone. Welcome to another episode of In Conversation, my advisor host today. Today in conversation, our guest is Mr. Alok Singh, Chief Investment Officer of Bank of India Mutual Fund. Alok comes with investment management experience of over 20 years. Welcome, Alok, to In Conversation, my advisor coach today.
Thank you. Thank you for inviting me.
Our pleasure, Alok. Our pleasure. So, Alok, could you tell our viewers something about yourself, about your investment management journey so far?
So, uh, as you said, it's been over 20 years now. I started by managing fixed income funds initially. That is what I did for first 10, 12 years. And subsequently started managing equities, started with managing hybrids, and then subsequently, since 2016, I've been managing the full equity funds as well as managing the entire investment team. So that has been the journey so far. This entire transition, actually, if you look at right from being a prop trader in a bank to fixed income and to now equities and complete investment basket, obviously gave me a perspective, especially in terms of understanding macros and micros and the companies. I think that has helped, and that can be seen if you look at our hybrid funds, the way they have been structured, the way they have done. I think that's it has been a um, quite a fulfilling journey, I would say, personally speaking, so far, and I think has given me right exposures, and I've been thankful for being exposed that way.
Wonderful, because very rarely you see that someone has expertise from both the sides. So having managed fixed income for a very long term and now in the equity. So if I were to just ask you, on the lighter side, which one do you enjoy more? Fixed
See,
income or the equity?
yeah, so every part has its own nuances, challenge, excitements.
Yeah.
But if you look at, it is not that either of it is a smaller asset class. If you look at fixed income globally, also is a large enough asset class. It is
That's
not
right.
that it is small. Yes, of course, the dynamics is different.
Mhm.
Uh, but if you look at from the long-term investing point of view, especially in the inflationary context, and that has become more pronounced for last 4 5 years as we have seen the surge in inflation. Getting the inflation adjusted return
Mhm.
out of fixed income without taking risk
Mhm.
is becoming
A mighty
difficult.
task.
So to increase your return over there, you have to move towards credit. And the moment you start moving towards credit, you anyway start moving towards equity. So might as well, look at equity as an exposure, I think.
Very true. Very true. Absolutely. And you said it very rightly that increasing alpha in the debt side has become mighty challenge.
Yeah.
So yeah, so of course equity is somewhere where you can move towards the higher risk profile and of course in expectation of higher alpha as well.
Yes.
So your Bank of India Flexi Cap fund was launched in June of 2020,
Yes.
and it has definitely given superlative performance in the 1 year, 3 year, return category compared to its category average, as well. So, could you tell our viewers more insights about your Bank of India FlexiCap fund, its style of management, agility within the sectors, the market caps, etc.?
Yeah. So as the name suggests, FlexiCap, what we have tried to do for last 4 years now, that we have tried to keep it flexible,
Mhm.
right? To the extent that, in terms of the market cap, we don't have a fixed ceiling or floors,
Sure.
depending on the our understanding, market dynamics. We keep on changing, adjusting. But obviously, it is not a very, very short-term call, 1 month, 2 month. We take a medium-term call. So maybe a few quarters to a financial year kind of a thing where we adjust. And if you look at over last 4 years, for example, if I give you a large cap, right? Large cap has migrated in last 4 years, right from being 40% to something like 70%, right? And it is not once, it has happened twice in last block of 4 years. Similarly, if you look at small cap from being 10% to 35%, and so we have been being quite flexible. And I think that has helped us along with the right sector and theme orientation while we are doing so. So we have been trying to follow more like trying to identify themes um, in which we see that the profit pools will increase, right? And as we see, our hypothesis getting validated by the market's financial performance, we have been building on our position. So, for example, to make it more understandable, say, for example, I identify and my team identify that, okay, X looks like a tenable theme to work on. And ideally, we will like to allocate, say, 10% of our portfolio or 15% of our portfolio towards this theme, right? So you start gaining knowledge sector wise, because theme can be multiple sectors, it can be multiple companies, which could be mid, small cap, kind of a thing. Sometimes, the themes are not tradable, but whenever it is, then you try to capture the entire breadth of it, right? And with that, you start building a position, because you are taking, typically the themes don't mature in 1 quarter or 2 quarter, they take longer. So then you get a chance to allocate a larger portion of your capital into the theme. And as you're building on position, as you're getting more confidence, you're getting validated. I think that has worked from the risk management side also, rather than just building up, say a 10% position and then waiting for it to mature and behave as you wanted it to be. And if it is not, then you are sitting on position which is not as productive as you thought, and then it's a drag, and you try to do a course correction and things like that. So I think broadly this is the management style we have been doing. This also has helped us in not having very, very high concentration risk. If you look at our portfolios, have typically around 55, 60 stocks. Typically, sometimes it may move up or down, but that's what we have tried to do, with top 20 stocks forming roughly 50% of our portfolio. So it is not that it is very, very diversified because of 50, 60 name, but it is at a decent amount of concentration also. And then overarching themes working on it, I think cumulatively it has worked for us.
Sure. But generally, is it more growth or more value orientation, or momentum or mix? If you could just highlight that as well.
Okay. So if you look at, we have a growth bias.
Okay.
Because without growth, neither the value get unlocked nor the momentum get built.
Sure.
Right. So there has to be a growth element. It may not be today, it may be emerging. Right.
Okay.
So that could be a slightly futuristic call, which we would have taken, that, okay, based on this thought process, these set of businesses or these set of sectors may see a growth happening.
Sure.
Right. Like I give you a very, very good example. If you look at NTPC, for that matter, is a very, very um, value stock in our Indian context, right? But if you look at as the power demand increased, right, and the PLF because of that started moving up, you have seen growth coming in there, and there is that the entire power sector, if you look at, has been re-rated. So it was not the growth day one, it was not a high growth day one, but certainly there was a growth element which was emerging. So
Sure.
we are paying attention towards growth, but it is not that we are only buying companies which are very, very high growth day one. So what we are looking at it that ultimately, the ROEs of the businesses, okay, will converge with the share price
Mhm.
ultimately. So you are looking at whether the ROE profile is good or it is changing. So for example, if you look at the average ROE profile of, say, for example, uh, a broader market like Nifty 50 would be around 14% on a CAGR basis. That would be a ROE growth over there, right? Which also commensurate with the long-term return, more or less, over there, right?
Sure.
Now, if I have to make money as an alpha, right? So my portfolio stocks should either have a higher ROE day
Mhm.
one when I'm investing, or should have a ability to become a below average to a above average stock.
Sure.
Right. So, for example, somebody having 7-8% ROE today, but has a potential to move to 17-18.
Sure.
Right. So if that happens, obviously you make humongous amount of money over there. Because something which is already making 20% ROE, obviously the price perfection happens. Market is quite efficient, right? And then you don't have scope of making a supernormal profit. You will if it is a good business, obviously it make you decent return, maybe above market on terms of the average return. So I think somewhere we have that growth bias. We are looking for either the growth is there or growth can be there. In
Right.
that context, even if it is a typical value stock, not so doing well, a turnaround thing, we are look happy to look at all of it,
Sure.
provided we understand, we are able to make our hypothesis around it. If we don't, uh, find it understandable, right, then it may be screening by, but we will not be interested in owning it.
Sure. Sure. No, thanks for that. It's very logical, of course, what you explained. So the extension of the question is if you could also just take us through your investment management process. What's this investment management team size as Bank of India Mutual Fund, and specifically on your equity research
Yeah.
part.
So if you look at it's a uh, 9-member team on the equity side, which includes me as well. There are two more fund manager, one assistant fund manager, and then there are five analysts.
Okay.
Right. Each of our fund manager also has a analyst responsibility, right? So including me, so that it makes us, we have an research team of 9 people,
Right.
right? And then we have a concept of investment universe. So each and every stock which we buy has to be part of universe. It has to be discussed, thrashed. We have to have that comfort level that this makes sense from all parameters, which is financials, management, business. We look at typically the way stocks are analyzed. Then, of course, it forms part of the universe, and once it is part of the universe, it is then can be picked by the fund manager, right? Fund manager has got full freedom to choose any of it in the proportion they wish to. Obviously, by doing it, they have to be guided by the offer document and the objective of the fund. Also, each of these stocks basically get bashed into six categories.
Mhm.
Okay, which is basically compounders, challenger, intrinsic value, turnaround, cyclical, and basically, yeah, six, that's it, right? So, how does it help is basically each of it, and this get reassessed every quarter,
Mhm.
or so which means that something which is a challenger today could move to an intrinsic value,
Mhm.
right? Or something which is a turnaround, after a turnaround happen, it may move to a compounder story. So we reassess every quarter. How does it help? Basically, it helps us in the risk management because, see, most of the time we pay a lot of emphasis in terms of alpha creation by finding unique ideas. But if we are able to size our trade better,
That's
take,
right.
that itself will generate a lot of
Absolutely
value.
correct.
So we don't have to dig the earth every time, but whatever
Absolutely.
else we have, if we size it rightly, so this helps us in sizing. Once I say, okay, this stock is a compounder,
Mhm.
then my fund manager can take 4, 5, 6% in a single stock. But supposingly he wishes to move his portfolio from a bit conservative and he wants to move towards cyclical because that's what the trends are showing. Then supposingly he has a he want to shift 10% weight from a compounder, which typically will be matured businesses and all, to a more like a cyclical stocks. Then that 10% may be coming from two compounders. But when he will buy cyclicals, he will have to buy at least 3 to 4 cyclicals.
Sure.
So basically, because our system will not allow you to have that large size position,
Mhm.
right? So basically, you have to then distribute it, and that's how you are able to control the volatility over there. Typically, and this badging is from the business size in terms of the liquidity and all those that is considered while looking at the appropriate
Sure.
allocation towards it. And then we reassess it on the regular basis. As long as our hypothesis hold, we are happy to hold stocks. We are not that paranoid with the P multiples and things like that. As long as our hypotheses are holding, we will continue to
Sure.
have a runway. Obviously, our risk parameters, have some limits. So, if it is breaching those limits because of appreciations and all that, then obviously we cut down,
Absolutely.
right? So this is, in a nutshell, this is how we go about.
No, thanks. Thanks. Absolutely. So, Alok, one question, which of course is that how the equity markets you will perform in the next 3 to 5 years. The question which I want to put across to you is that what is your thoughts on the equity markets in the near term, which is around a year? Any particular challenges you cite in this
So,
period?
okay, so since the elections are over, and that was one major speed breaker which market had crossed over. And while there is a coalition government, but as of now, it appears to be stable.
Yeah.
Um, After this, if you look at budget, we have got the gist of it in February, and I think the way the coalition is behaving, we don't see any major slips over there. So I think that is one risk which is behind us, but it can emerge again. But you can't plan it, so you have to play when it comes, kind of a thing. Then comes, basically the basics of the markets, which is basically the earnings. So if you look at the earnings growth, is broader market, I think is expected to be around 14, 15%. That's what our estimate says.
Yeah.
And if the markets is able to chug along that kind of earnings growth, then I think that should get translated, with some premium, should get translated into price appreciation also. Uh, and why I'm saying this is because, historically, if you look at, that's what the conversions happen. Right now, we are seeing more of the top line growth translating into EPS growth,
Mhm.
because we believe that the margins have peaked out. We don't see margins expansion anymore. Uh, but yes, the ability to sustain or marginally down is there, and that's why that entire top line should translate to an EPS growth, and that's what we are penciling. If that happens with no major unknowns in the horizon, whatever is there on the geopolitical side
Mhm.
is something which is discounted by the market.
Yeah.
Obviously, U.S. election, and especially what has happened in the debate last week
Mhm.
has changed some of the risk frameworks globally. But those are the risks which you can't preempt. You have
Sure.
to react to that. So as of now, we are expecting that the market should remain stable,
Okay.
uh, clocking somewhere close or marginally higher to their long-term averages, with the earnings and the government policies and things like guiding them going forward. So yes, if I put it, next 5 years, our view is that next 5 years will give us almost similar returns as what we have seen in last 5 years,
Oh,
frankly.
wonderful. 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 Well, thanks for that. So today, through this in conversation, what message, Alok, would you like to give to the advisors, the mutual fund distributors, the investors about your Bank of India FlexiCap fund? Since it's performed so well in
Yeah.
these past few years.
Yes. So, thanks for the compliment, Suren. But if I look at the way the fund has managed and migrated the risk over last 4 years, I think it becomes a good product for the people who always struggle to achieve the right risk allocation
Sure.
terms of the categories, in terms of large cap, mid cap, small cap, as well, sectors, because, sectoral funds tempt you many a times, and then by the time you know, you move in, the trend changes, because
Absolutely.
if you look at the sectoral rotation, what we have seen in last few years have been very sharp.
Mm,
Right. So this fund gives you that ability of peace of mind. At least that's what we have been able to demonstrate, and I see
mm.
no reason why we will not be able to repeat it going forward. So I think you should be looking at this way. If you think that you can do yourself, or your advisor can give you that, then obviously you can always have your own recipe. But if you don't have recipe, and you want the entire dish, I think this can be that complete dish.
Absolutely. No, I totally agree because flexi cap as a category is a must to have category in any and every client's portfolio. That's what I personally believe. So I think because allow the chefs, as I speak, in the kitchen, which is the
Yeah.
fund managers,
Yeah.
to decide as to how and when they want to move within the portfolios across the styles, the sectors, the market caps, etc. So it's definitely a must to have scheme in any client's portfolio. So that's what I believe. But thank you so much for that. And Alok, I think great insightful conversation with you today. And once again, our best wishes for a great performance by Bank of India FlexiCap Fund. And thank you very, very much for joining and taking out time, to have a conversation today.
Thank you. Thank you for inviting me.
Thank you, Alok.